Okay, Charles, welcome. QC Copper and Gold. It's been a very busy week. All of our shareholders by now know we had a really incredible milestone report come out. But before we get into that, I want to first congratulate you and thank you. You did a phenomenal job. You sourced the project. You've been the mastermind behind delineating this deposit. It was sitting there for 30 years and nobody saw what you saw. So congratulations, sincerely. This report was really a milestone, phenomenal. Over 100 million tons global envelope.
Yeah, I mean,
give me your insights.
I mean, if you recall, well, first of all, thanks a lot for the gauge of confidence, evidently, and all I can say is that it's a team effort. Okay, I mean, guys like Denis McNichols, that is the project manager on the project, and the people who worked on the project during the 2 seasons. There's been a number of people involved in this success. Yes, I fully acknowledge that I identified the opportunity. It sat there for quite a long time before anybody really picked it up. But to be also very frank, I tried 3 times. It was only when I joined forces with you that ultimately that we were able to make the deal, and that was in part a question of negotiation, but it also was really, I think, what counted most was the fact that we were structured with a new company. We didn't, our share count was modest, and so and at that time Pierre and his son Fred. They weren't really in a position to do much with the project. So it was, it's always multiple reasons that these kind of things work out. So yes, I'm very happy with the outcome, and I'm convinced that it's just the beginning. Really, it's we have a lot of work ahead of us.
You took the words right out of my mouth. It is just the beginning. We, QC Copper and Gold has, in a sense, struggled from a share price standpoint to get the recognition I believe you always felt. But I think the world was sort of waiting for this report that it came out. Well, let's talk about the report, what it means in terms of in simple math. Nearly 2 billion pounds of copper equivalent, pit constrained, in a pit, in the middle of Quebec, by the rail, paved highway, power lines running through. I mean, it sounds like it checks all the boxes. You know what? It does check all the boxes. You and I both know that. I think, and as of last week, the world's just starting to realize. So I think it's just the beginning. We're still a $30 million market cap company. Half of that is base load shares. So what do you see going forward? What's the plan?
Okay,
tomorrow?
well, first of all, what we need to understand is what makes up this 100 million tons. It's 2 mines, 2 historical underground mines that produced for 40 years. They mined about 24 million tons at about 2.5% copper and a gold credit. So they closed down in 91. When they closed down, they left behind about 2.5 million tons of material in the mine. Evidently, from the get-go, we weren't going to go back and try and pick up that 2.5 million tons of broken ore or whatever, because that wasn't economic. We knew that. But having said that, I started being involved with this project in 2007. Okay, and what I did when I was first involved with this project, I recommended immediately that we should start digitizing the historical plans and sections, because this was an old mine that everything was done on paper, so nothing was digitized, and so the first thing to do was to get those stopes and the veins and all the underground workings, to put them in a digital format, so that we could use that information both for marketing and also to better understand what the deposit. And one of the first things that became very apparent when I did that immediately was that there was still quite a bit of material left in the wall rocks that hadn't been mined, and because the grades were lower than their cutoff grade. So as a result, I started looking at like the envelopes that made up this low grade material, and I could see that we could build some real tons out of it. So the way that we ultimately interpreted the deposit, and the way we did the resource estimation on that deposit, is that we digitized all the veins, we digitized all the stopes because the stopes are voids, they're holes that now they're holes, most of them backfilled, but they're still holes, and around the veins we have low-grade material. So what we did is we basically created these envelopes of these hard boundaries around the veins, such that we could interpolate the veins, okay, and then we could come back and interpolate the material between the veins. And that allowed us, once we had the veins interpolated, we could just subtract the volume of the stopes to get the grade and tonnage in the veins. And we had the surrounding envelopes that we could digitize. Whatever was outside those envelopes ended up being zero grade. That was important because last fall when we ran our numbers internally, we couldn't publish it because it wasn't 43101 compliant, but we came up to about 55 million tons, if you recall. And when I looked at those envelopes, I saw that we could do better. We could probably fine-tune those envelopes and increase them, lower grade a bit, but at least we'd have that material. And then because we started drilling last spring. When you drill, you discover stuff, right? So we discovered that there were some veins that hadn't been mined, and therefore, because they hadn't been mined, they weren't named. Okay, there were no stopes in them. And therefore, there was no envelopes around them. So those were the saddle zone. And the way that our calculation was done last fall, we ended up with two pits with a saddle zone in between the two. And that's exactly where we found the saddle veins. That's why we call them that. And so we put some envelopes around the saddle veins, and that allowed us to lower the saddle, which added more tons. So that's why we went from 55 to about to over 100 million tons. What was really surprising, okay, was that we ended up with 82% in the measured and indicated category, which you never see. That's like unknown. Like it's
for a maiden resource, it's remarkable.
For a maiden resource, yeah, never see that. It's highly unusual.
And that's because we're benefiting from the database that we spent a lot of time and effort. A lot of resources went into building that database, right? I mean, you said you were working on it from 2007, and I think we had Antoine working on it for a very, very long time. Yeah. Many iterations of people. So a lot of work went into that database, and that ultimately made the MNI, I would say. Is that fair to say?
In a nutshell, what was the database? The database was dozens of veins, okay, that were digitized separately, hundreds of stopes that were like probably over 500 stopes that we digitized. That's a lot. It's over 16,000 drill holes, over 350,000 assays, 1 million meters of drilling. All of that went together to define what was the Springer and Perry. The advantage that we had was that it wasn't like a new discovery. We had all this information. We knew what it looked like. So it wasn't a problem of saying, okay, is it going this way or that way? We knew where these things were going. So it was very easy for us to actually put the envelopes around the veins. And I still think that we can get a bit more. We can do a bit better, particularly on Perry and also on the saddle veins, because we're going to be drilling some more in the coming months on the saddle veins, so we may be able to increase the and anything that we can do within the pit is that to increase the envelopes of these halos is material that goes from waste into what is mineralization. So there's opportunity there to improve things a little bit. In addition, if we want to keep on going on what else where do we go and what else we can do from here? Well, we knew from the work that was done by RPA in 2014 at Perry, specifically at Perry, that they had defined two resources there, or not resources, two exploration targets. That's what they're called. They're not quite resources, but it gives us a range of tonnage and a range of grade. And they identified a small target on surface, which is sitting in what we modeled as our Perry pit in this phase, and also it identified an exploration target of 3 to 11 million tons between 1.5% and 2.5% copper. On the optimistic side, that represents 500 million pounds of copper. Okay, probably not that much, but still, it's a substantial amount. The question that we have, and we know that if we could identify something that is close to 2% copper at depth on Perry, we probably could mine that in a bulk fashion underground. So there's certainly possibility of doing something with that, and we have all the information already. So we're gonna be working on that in the coming months, and the drilling program that we plan for this fall, we're going to be looking at follow up on some good exploration results we got with our drilling on the eastern veins. There was known mineralization towards the east. They had mined some of that stuff underground, particularly the K veins. They mined that underground, but these veins never came up to. They come up to surface, but they were not mined on surface because they weren't wide enough, or all kinds of different reasons because of the constraints that they had. They never did evaluate that for an open pit. It was just they worked underground. That's what they did, and so the eastern veins, we are certain that we'll be able to make some tonnage. We don't know exactly how much, but we'll be able to do some small satellite pits with the eastern veins. And the wild card, what I call the wild card in the whole story, I think, in terms of changing really the scale of the project, because right now we have a project that's in the zone of scalability. What do I mean by that? I mean that once your project reaches a size where you're talking about a mill that's going to be taking in 8,000 to 10,000 tons a day. From there on, you're in what we call the scalability zone. So what happens there is that as you increase the size of your mill, okay, your operating costs go down faster than your capital costs increase. Okay, so if you can put in a mill that's 40,000 tons a day, it's way more profitable than a mill that's 20,000 tons a day. Okay, so that's really what we're trying. So if we can do that in the next 12 months, and the way we do it, I think the real wild card is what we've called the Beaver Lake Fault Zone, which is a structure, okay, that is parallel to and is on the edge of both the Robitaille mine and the Cook mine, two mines that the historical mines, the other two mines in the camp. And that structure, we know from the historical drilling, that is mineralized for over 3.5 kilometers. What the reason why it was only mined at Robitaille and Cook was because that's the only place where they could find the type of mineralization that they needed to make a go underground.
So let's recap here. So the areas of growth are in and around the pit, which are the Springer and the Perry mines. Okay,
yes.
So I think some of the low-hanging fruit would be to continue drilling out the saddle zone, widen that area, make it a wider, perhaps deeper,
and on the edge of the pit too.
And then on the edge of the pit, and so that's where we have the eastern veins.
Yeah, that's right. That's right.
So those are sort of two main areas.
And Perry at depth, which would be an underground, but we could probably access from the Perry pit itself.
Correct.
But it would be a different beast. But there's a potential there for up to 500 million pounds. So that's worth
significant.
Pursuing. Yeah.
That's significant, especially the high grade stuff. And then the other aspects you're talking about is the Beaver Lake Fault, which is sort of further to the east, that encompasses the third and the fourth mine that were operated by Falconbridge, which we really haven't given their due.
We've drilled a little bit, and we drilled around it, but we only put, I think we only put 3 holes into it. And only one of the holes really, I would say, was truly into that structure. And we did intersect some copper, and we did intersect some gold mineralization in that hole. So it's I think it's promising.
So there's a fair amount of work to do on those third and fourth mines.
We're not going to be drilling the Beaver Lake Fault Zone this fall because we need winter conditions to access most of it, but it's planned that we'll be drilling in the winter.
So what we're thinking about right now, I mean, really the resource and the new model is really just fresh in your mind and my mind as well. So we're sort of just wrapping our heads around what we have. I mean, I guess we know what we have, but wrapping our heads around what are we going to do next?
Yeah,
so we got this fall drill program, but really what's going to lead up to is a substantive drill program in 2022.
Exactly. And there's other things we want to look at that are more of the exploration stage. It's less discovery, more discovery potential, because and that leads into the justification for us. Why don't we do a PE, like a preliminary economic analysis now? Okay, why not now? Because if you recall in our interview back in February, one of the things that we said towards the end was that as soon as the resource comes out, we want to pivot towards a PEA. But with the subsequent drilling that we did, we realized that there's a lot more potential than we thought. Okay, and a PEA really it's a message to the market that your project has reached its natural dimensions, and that therefore from then on you're justified in pivoting to a more detailed evaluation and to development of the project. But you don't want to do it too early, because if you do a PEA, it does two things. It says the size of the project, and if you have still a lot of exploration potential, what do? You come back with another PEA? No, it makes no sense.
Well, look,
right?
We had a lot of discussion around that.
That's
What
right.
is the best path forward? And until
exactly.
that resource came true, we didn't really know what the best path
right.
was. But when we saw it, we saw the exploration potential, that lower hanging fruit, and then the upside potential. Why define the economics and engineering on something that's half baked?
Exactly. So next 6 to 12 months, okay, we do exploration. We try to define as much material as we can. Then if that's what we get, that's what we get. Then we keep on. We still be exploring afterwards, but discovery is a different thing, because a separate discovery would be the object of a separate project. Okay, whereas everything that we've talked about in this discussion is all very near, and it's like it's all part of the same project, like literally. So the bigger we can make that thing, even if our grades are considerably lower, like our average grade is 0.85, okay, equivalent copper, but if we can add 500 million pounds of copper at 0.4, that would be super economic for us.
Or even more, 500 million pounds at depth. I mean, it's the grade. I mean, when you think about a big project like this, really, it's a multi-decade project like mine.
Absolutely.
So to me, that means we got to chase grade.
Absolutely.
Right? Because you don't want to replace reserves in year 30. You want to look for the high grade stuff right now, which leads me to the starter pits, right? Which this project has many benefits, and one of them is these crown pillars, which come right to surface. We defined almost 11 million tons at 1.26 million. So if you did a 10,000 ton a day
with low strip ratio,
so that's high payback, good NPV, good IRR. I mean, to me, that's where I really want to hone in. And part of 2021 is look for better defined high grade zones and look for new stuff.
That's right. That's right. So that's all in our that's all in the plan for the coming year. Right now, we're just compiling the Beaver Lake trend. We have the drilling of all that. That's fine. But we have the solids for Cook. But we need to build the solids for Robitaille to get a better sense of the relationship between these big structures and these parallel or satellite structures that we see, or splay structures that we get on that system. So to bring us to the drilling phase, a decent drill program on that next winter.
Okay, so we have the 𝐵𝐸, of course. That's our flagship, no question about it. That's where those 2 billion pounds are. But we also made a very opportunistic acquisition earlier this year called the 𝐥𝐢𝐤𝐞 project in the 𝐤𝐵𝐸 camp. So it's about 15, 20 kilometers away. It's on the rail. It's about 500,000 ounce deposit, pit constrained, 1 grammer with a copper credit, in and around a whole bunch of other mines. So I mean, talk about it, but also talk about it in the context of the larger 𝐤𝐵𝐸 camp.
Yeah. Okay. The couple of things that we need to mention about the 𝐥𝐤𝐤. It is primarily a gold deposit. It has 43101 compliant resource on it, but it does have a copper credit. Then the extent of the copper credit is not completely understood. It's something that I need to take up again with our partner on that project. But if there's a copper credit, it suggests that there's a good chance that it could be synergistic with what we're doing at 𝐵𝐸. So in other words, if we can process that material through a flotation mill, then it takes all its value. Okay. If not, if we're just recovering the gold, then probably a cyanide circuit would be more appropriate. So that's something that we need to work on. But in terms of the exploration, it's very clear that the deposit is open. Okay. To what extent is not really all that well understood. The deposit itself at the regional scale, if we pull back and look at the deposit at the regional scale, it's on a splay of the 𝐸𝐴𝐿 Fault, another one. And this is, I've been reinterpreting the 𝐸𝐿 Fault for what it means in terms of the mineralization at 𝐵𝐸, and also ultimately in the regional 𝐤𝐵𝐸 context. But one thing is clear is that the 𝐥𝐤𝐤 deposit itself is on a splay of the 𝐸𝐿 Fault. So and it's hosted by an intrusion So it produces a good material for for mining, and so there's definitely something that we could do with the 𝐥𝐤𝐤, and we were fortunate enough that we were able to pick it up just before the interest in 𝐥𝐤𝐤, and particularly with our resource coming out, it rekindles all the interest in the region. So the timing for our acquisition of 𝐥𝐤𝐤 was perfect.
It was well timed,
Yeah.
very fortuitous in the price that we paid and the terms that we got, and I think we are leading the charge in 𝐥𝐤𝐤, which is really being reborn. But to have a 100 million ton resource with upside there, I think it's going to generate a lot of activity in and around the area. So that's great news. So look, Charles, let's leave it there. I think again, congratulations to everybody. I know it was a team effort led by you, certainly on the technical side, and you had this vision, and you've seen it through. But as I've been saying to everybody who's listening to it, it's early days on this thing.
That's right.
So,
I agree. It's early days.
So good luck to us. Good luck to 𝐃𝐨𝐶 Copper.
Thank you very much.